Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash flowing properties in today's market. Here's your host, Gabe Peterson.
Welcome back to another episode of the Real Estate Investing Club. I hope you guys are having an absolutely fantastic day. I've said this, I don't know, the past like 5 episodes, but I am so excited for fall, and it is getting nice and crispy out here. The leaves are starting to turn. There are tons of fallen leaves in our yard, and I love it. So I hope you guys are having a good week. I hope you're enjoying the start of fall. It is a good day for a second reason, because we have Bryce Matheson with us here on the podcast today from Holbrook Capital. Bryce has tons of experience. He's gone from rentals to flips, and now his bread and butter is hard money lending. So if you guys are interested in starting your own fund or lending out your money to have it work for you, this is the episode for you. Bryce, I'm super excited to jump into this. Thanks for hopping on the podcast.
Hey, thanks for having me. Hopefully I can impart some wisdom to the audience and be of some help.
I'm sure we'll get some good nuggets. I told you before we got on here, we always like starting with stories. Stories are they're the way that we, at least that I interpret the world, and so it makes things a little bit more tangible. I'm sure you got a good one. You've been in it since 2016. So why don't you take us to the beginning of your story and tell us how'd you get into real estate?
Yeah, so I kind of like tripped and fell into real estate. It was never really like anything that was on my bucket list or anything that I really wanted to do. But basically, I went to school. I got the big boy job fresh out of college, and it was kind of like this thing where I was like, I've got this big boy job. I now need to get the big boy house, I guess. So like that was my extent. I was like, okay, I guess I'll buy a house. And at the time, I was living in an apartment with a couple roommates. And this was like, this was before I even knew that like house hacking was even like a term. I didn't even know that was a thing. So I was like, hey, I'll just have my roommates come and move into the house with me, and they'll pay me rent, and I won't have a mortgage, and it'll be great. So did that, ended up working out really well. And then about 2 years after that, we life looked different. I was about to get married, a couple different things, and we ended up selling my house. And I remember walking out of the bank with a check for like $40,000. And at the time, that was the exact same amount of money I was making at my W-2 job. And so I was like, okay, that's when the light bulb moment went off. And I'm like, I didn't do anything, and I made this much in real estate. I should probably look into this a little bit more. So that's kind of like the catalyst that triggered everything.
Yeah, sometimes life takes a turn, but those are the serendipity is great, because it kind of happened the same way with me. I wasn't like super honed in on real estate, but one thing led to another, and then you end up where you are. And so once you did that first flip, how did it kind of snowball from there?
Yeah, so we took those proceeds, paid off some student loans. I didn't have like anything crazy, probably about 15,000 in student loans. Paid off some credit card debt, couple other like miscellaneous things, and I think we were left with around 15 or 20,000 after all was said and done. And in hindsight, I probably should have kept that house, because we ended up moving into my wife's house. She had a house before we met. So we ended up selling mine. Probably should have kept it as a rental, but I just was ignorant, and you live and learn. And anyway, so we paid off some debt, took those proceeds, and we bought our first like non-owner occupied house. And it was a kind of like a duplex of sorts. It was a single family house, but it was nice because there was also a mobile home trailer in the backyard. And
interesting. Okay.
So it was like, kind of a duplex, but I think.
And this was out in Tri-Cities?
No, this was in Idaho still.
Okay.
Yeah.
Okay.
So I left Tri-Cities 18. I was probably 25, 26 at this point.
Mm-hmm.
But to this day, I still don't know that I've ever had a rental be more profitable on that. Like the cash on cash was like insane. It was like 132% or like something just like absolutely bonkers, but because I think after everything was said and done, like the mortgage was $700, and we were netting like close to $900 a month just on those two properties after everything, so like,
love it.
It was great. Yeah. It was like, okay, we got to keep doing this.
Nice. And it had a mobile home on it, you said?
It did. Yeah.
Was it zoned to have a mobile home on it, or permitted to have a mobile home on it, or was it
No,
kind of like
no, not at
grandfathered in
all.
kind of thing?
I think it was grandfathered in, and like it was definitely like the sore spot. Like anytime I would go down to the city and like talk to planning and zoning or whatever, like, oh
Yeah,
yeah,
like,
that
oh,
house,
that
you know,
house.
like that one, like, oh, like, oh, but yeah, somebody illegally moved it onto the lot in like the 80s, and
Yeah.
there it sat. And anyway, worked out really well for us.
I buy mobile home parks, and I've tried to get some other properties that I bought that aren't mobile home parks. I've tried to just get it to where we can move a mobile home, buy a mobile home, a tiny house or anything like that, and move it on there. Every
Yeah.
time I've been shut down, and so whenever I hear people doing that on a single family house, I'm like, hey, good for you.
Yeah.
Since then, I mean, you've done 75 flips. It looks like you've bought over 40 doors, so you really got into it. But you eventually turned your attention to fund or to lending out your money. Kind of tell us about the progression. Why did you choose to, liquidate your portfolio and go into lending? What was kind of the catalyst for you?
Yeah. So we originally the goal, like I remember I had this number in my head. It was like, okay, $10,000 a month net. I could leave my job, live a cushy life. Like that would be amazing. So we started scaling up on the rentals. We did really well. Like within the first year, we got 12 doors. But then we kind of hit like a roadblock, and we're like, now we're out of cash. Like what do we do? We had tapped out lenders. We had tapped out our HELOC. We were kind of stuck. So I remember talking to a buddy of mine, and he said, well, have you ever thought about flipping? And I was like, oh, no, I don't. And like, I don't know why I hadn't thought about that, but he's like, my extent to flipping was Chip and Joanna Gaines on HGTV. So I was like, okay. So,
as an aside, those shows, whenever I watch them, they put the numbers on the screen, and I'm like, that can't possibly make
garbage.
money.
There's
like, no way.
So
Anyways.
true. It's funny. And it's funny you say that, because they're like, if you've ever flipped a house, it's the exact opposite of HGTV. Like it's all about where can you save a buck, like lipstick on a pig. Like anyway, so we ended up we found a house, our first house to flip. We did all the renovations ourselves, which wasn't a lesson in and of itself, but all said and done, we made about $26,000. Which was great. It was like, cool, that's a down payment on another property. So we used that, bought another property. And at the same time, we just kind of kept flipping to get the capital to be able to buy a rental. And then after a while, we decided, we're like, you know what? We actually really enjoy the flips more than we do the rentals. Like we just kind of got tired of being landlords, dealing with tenants. My wife would get really into like the design aspect and the cutesy and the accent walls and the paint colors and all that stuff. So we ended up liquidating our whole entire rental portfolio and exclusively doing flips. And that's how we got up to like that 75, 80 flips in, over 4 or 5 years. Kept doing that for a while. And then COVID hit. And we had a project in particular that I can remember. It was just about everything that could have gone wrong did go wrong. Like it was rough. I remember we held on to this property for 14 months because I could not find baseboard. Like I remember calling every warehouse, every supplier. Yes, I know.
Of all the things. That's funny.
All the things. So like the house was completely finished except for baseboard. Like I remember calling like everyone in like a 12-hour radius, and I'm like, I will drive down with a flatbed trailer and like I will buy anything you have. I couldn't find it. So
that's funny. You think you could just get like a fence picket and just cut it in half and call it, paint it. That's funny.
In hindsight, that would have been smart. But anyway, so we finally ended up selling this property, and all said and done, we basically broke even. I think we made about $1,200. But as I was looking at the settlement statement, I remember seeing that my hard money lender at the time, he made 25 grand on that deal. And I was like, hang on a second. Like this dude didn't have the sleepless nights. He probably didn't even know what was going on with the project, and like he made 25 times what we did. Yeah. And so we're like, okay. So that was another light bulb moment. And that's when we started to transition all the way into lending. Cause I was like, we've had projects that have been really successful and made a ton of money. And we've also lost money, but I don't think I've ever seen a hard money lender, at least not with any of my deals, that have lost money. So yeah, that was.
No, that makes complete sense. A partner of mine, he has his own fund, and he says that's his favorite part. He owns a tons of industrial and he invests in self storage with me. And but he says the lending is the thing that he enjoys the most. It makes he's much farther along than I am. I think he does like 50 a month in proceeds from the lending. And every time I hear that, I'm just like, maybe I should jump into that. That sounds like a good deal.
Yeah. Well, and from my perspective too, like it scales so much faster because most people start out with just their funds, but then you end up, starting a fund or a syndication or however you want to do it, raising capital from other people. And then that's how you really scale quickly.
Yeah. So let's go through that process because it is something that I have been interested in. And, you're going to school me on this because it's not something that I've done. And so how should we take this? The two biggest questions in my mind is one, how do you make sure is the underwriting? I know how to underwrite properties, but how do you make sure that you underwrite the person doing the deal? But let's put that to the table for now and talk about just how the process of getting the loan done. So how do you find the person? Once you find the person, what is the process you take them through? What are the documents that you need? All that kind of stuff. Take us through how hard money lending works.
Yeah, absolutely. So the nice thing for us is because we flipped so many houses, like we were pretty familiar with the hard money lending process just to start because that's how we continued to scale as we borrowed funds from a lot of other lenders. So I was familiar enough with that. But the other nice thing was we were able to build our network pretty quickly because I knew all the other flippers in the area. I had been to the REIAs, like I already had like a pretty good network. And also, as soon as you say you put it out in the open that, hey, I have money, people come out of the woodwork, so like it's really not that hard to find borrowers. Typically the other problem is having enough funds to keep up with all the borrowers. So that's actually that's one of the easier parts. As far as like underwriting,
finding the borrowers is the easiest part.
I personally think so. Yeah. Okay. I really do. Yeah.
I feel don't mean to jump in here. I'm just going to put my opinion out there because, I'm learning alongside everybody listening. I feel like it would be easy to find borrowers, but it wouldn't be easy to find a borrower that you trust not to screw up the property. But then again, if you're underwriting correctly and you just get the property back, I guess it wouldn't be that big of a deal. Anyways, right. I'll let you keep going.
Right. So a lot of people, just to kind of spin off that, a lot of people say they have this like loan to own model. So like they'll do really risky loans and they'll say, you know what, like, cool, if this doesn't work, there's a lot of equity and I'll just take the property back. That's not my model. I don't really like it. It just kind of like, it feels a little slimy to me. That's not what I want. Yeah. Like I want to have good borrowers, good projects, because it's a win-win for everybody. If you win, I win, great, win-win-win all around. I love that. Yeah. I have a personal belief that if somebody cannot manage their own household finances, they're not going to be able to handle our finances. They're not going to be handle a project.
That's fair.
They're not going to be able to like execute on that. So the borrower, I should say first and foremost, the collateral is the most important, the deal that you have on the table. But the character is also significant. So we want to make sure, like, is this person responsible? Can we see that there's some element of like professionalism in other aspects of their life? Like, have they successfully held a W-2 job? Are they like just basic stuff, like do a credit check, do a background check. Like, are you a good, decent person? And more often than not, that will keep you safe when it comes to doing a loan. Okay.
That makes sense. So once they've kind of passed that threshold, what are the next steps?
Yeah. So next steps is obviously like we want to run the numbers. We want to see like, and that's another perk for like having done so many flips. Like you could bring pretty much any deal to me in my own backyard, and I can tell you in 10 seconds if it makes sense. Like instantly on the spot, like this does or does not make money right off the bat. So we absolutely want to check the numbers, make sure it all makes sense.
On that note, I noticed that you guys don't only lend for Post, or I think, did you say Post Falls, Idaho? Or just
Idaho Falls?
Idaho Falls, yeah. So you don't only lend there; you also lend in other markets, which means that you don't only lend in your backyard.
Correct.
Why? So, how do you get comfortable with a new market when you're lending? And then, why do you choose not to only do your own backyard?
So I would say 90% of what we do is in our own backyard.
Okay.
We've got some deals in like Alabama, Oklahoma, a couple other like, and people are like, what, the random? Like, how did you like pick those? But what's funny is we've actually had borrowers who have moved out of state to Oklahoma and Alabama,
Mm.
and they call us and say, hey, I know this is like out of your network, but would you do this? I'm
Got
like,
it.
yeah, you're a great borrower. So like,
So it was kind of a natural progression.
totally,
Yeah.
totally. So right now we're definitely not targeting nationwide by any means. It's not that we won't, but we definitely prefer to do stuff in our own backyard.
Okay.
To answer your question though, there are ways to do that. Like people cringe when I say like Zillow. Don't take Zillow for face value, obviously, but like it's still a good like directionally
Let's get
correct
ARV.
number. Yeah,
Yeah.
like so you can look and see like what stuff is listed on there, and like if somebody brings you an ARV of 400,000, but everything else around it is 250, like that's probably not a great deal. The other thing we've done too is we've like had agents run BPOs for us if buyer purchase opinion or broker purchase opinion. So that's a good option too, like a little cheaper, low cost way of than doing like an appraisal.
Yeah.
But those are all good options to make sure that like what they say it's worth is actually what it is worth.
That makes sense. You mentioned appraisal. One of the reasons people usually want hard money loans is that they're quick. Sometimes they don't even require an appraisal. Do you require appraisals? And then what is the general turnaround time for your loans?
Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com, so if you are interested, head on over there. With that said, let's get back to the podcast.
Typically, we do not require appraisals. Like you said, that's one of the perks of coming to a lender. And like I said, when it's in my own backyard, I don't need an appraisal because it's like, no, I know whether this makes sense or not. If it's a very weird, strange, one-off like commercial thing that I'm not as familiar with, we may require an appraisal. But even then, it's like kind of hard because it's up to somebody else's opinion, and it's kind of like not a cookie cutter
Commercial,
deal. It's just, yeah, it's like
commercial
it's a
appraisals
game,
are,
like, so. Yeah. So no, not necessarily. As far as turnaround goes, like typically 3 to 5 days, like we can close really quick, as long as like it's somebody that we've worked with in the past. We're not busy, as long as they can get us documents and everything we need quickly. As long as title can close, like, yeah, we're good to go.
Wow. 3 to 5 days. That is quick. Mm-hmm. So if that's the case, then you need to know exactly what you're going to be doing and what you'll need from the borrower when they reach out. What is it that you have them send you? Like, are there specific documents that you need? I know I've gotten loans in the past, so I'm not completely being naive here, but I'm just curious, like from the lender's perspective, what is it that you require?
So a lot of the similar documents that you would think with like a traditional mortgage. So like, I need a purchase and sale agreement. I want to take a look at your financials. We'll run a credit check, a background check. Typically I'll ask for like a W-9 just so I can like issue like 1098 statements and things like that. We'll do some other things, but it's more like, it's less about the borrower. Like we still need like driver's license, LLC formation docs, all the basic stuff. And then other stuff is more specific to the property. Like if you have an inspection report, I want to see that. If you have an appraisal, I want to see that. I want to see your scope of work. I want to see your budget breakdown. I want to see, just pretty much anything and everything you can tell me about the property so that I can quickly just do a high level overview and spot check it and make sure like this is or is not going to work.
Yeah, that makes sense. So you focus mostly on single family. Do you do any commercial?
We do. I would say single family is definitely our bread and butter. That's like probably 80% of what we do. We've got some like mobile home stuff. We've got some raw land. We've got some development. We've got some new construction. Commercial is definitely a very small part of what we do, but we have done it in the past. It's just a different ball game, you know? So like we try and I wouldn't say we shy away from it, but just like organically, everything that comes in is primarily single family.
Yeah, that makes sense. There is definitely a market in the mobile home space. I just bought a close in the park the beginning of this month, and
Nice.
it was down in San Antonio, great market. The numbers on the park were fantastic. There was a lot of upside, and I had a hell of a time getting a loan for this property. It was ridiculous. I reached out to so many people, and they were just like, oh, I don't really know mobile home parks, and I don't know how many lenders. Our sheet had over 100 lenders that we were reaching out to, and I just couldn't get anybody to lend on it. And I invest in mobile home parks. I know them. I understand what works, and this was a slam dunk. It was a great deal.
Right.
I did not understand why people weren't seeing what I saw, and so I just feel like there's a lot of opportunity for mobile home parks, self-storage facilities, that kind of thing, where
Absolutely.
people, it's a little bit more of a niche product. But there's not a lot of lenders out there for that.
It's so interesting. Yeah, it's so interesting that you say that. So that very first rental that I was talking about with the mobile home in the backyard, it wasn't even like affixed to the ground. Like it was just sitting on the dirt. But as soon as you tell a lender, hey, it's got a mobile home on the lot, they're like, nope, sorry, can't touch it. And I'm like, just pretend it's not even here. Like we're getting a loan on the house that like it's on a permanent foundation. Like this is real property, right? Like just close your eyes. Like it's just like a car that's sitting in the backyard, like just forget about it. But you say mobile home and people just like, I don't know, their eyes gloss over and they're like, nope, sorry, I can't do it. Which that in and of itself has been a really big lesson for me and myself. So similar to how you said, you talked to 100 different lenders, that first property I got 42 no's. 42 no's. I had to call 43 different lenders until I finally got an approval for one because everybody just said, nope, sorry. So if I could give any advice for anything you do, whether that's real estate or otherwise, no doesn't necessarily mean no.
Just not like, for that person.
Not for that person. Like there is always somebody out there who has an appetite for it, but like you're going to have to make some calls and you're going to have to put in the work and the volume to find it.
And it really is, I feel like it's a good test of your own conviction in the deal. I knew this was a slam dunk. I knew it was a deal. And if I thought it was kind of, on the fence, it wasn't a great deal, then I probably would have stopped after calling like 10 people. But if you really believe in it, you're going to keep calling because this is a deal. It underwrites well. Somebody has to lend on this. So yeah, it's a good litmus test for sure.
Absolutely.
Okay, so there's people are reaching out to you. You get them underwritten. You get all the docs out. Once they finally close on the deal, how do you service the loan?
So a lot of lenders will either sell the loan on like a secondary market or they'll sell it otherwise. We actually keep everything on the books. So like we don't send you to a third party servicer. Like one of the main servicers out there is like FCI. So if you go to like one of these huge national hard money lenders, they don't even really want to deal with it. They close the loan, they collect the points, and then they just kind of ship you off to this other company to service it. I think that's a mistake personally. We keep everything in house because there's some good interest that you can collect on the servicing pieces too, rather than selling it off to somebody else. So, that's pretty much it. So we are unique in the sense that we actually don't require monthly interest payments on our loans. Almost every other hard money lender out there does. The reason we don't is because when I was flipping, I really appreciated not having to do that. For example, if you have 3, 4, 5, 6 flip projects all going at one time, if you're making interest payments, that's like 40 grand a month, like that can add up really fast. And the reason why someone's coming to you in the first place is because they probably don't have that much capital. I mean, you've got to have some kind of a cushion and reserves, but like they don't have enough to perform on this property. So what we do is we just collect all the interest on the back end when the loan closes. We just add it all up, and our borrowers love that. And a lot of people hear that and they say, wow, that is really risky. How can you do that? But like, Obviously, we've got to make sure that we have a significant equity cushion. Because of that, we might not do as high on the LTVs that somebody else would. But it's worked for us and we really like it. And it actually makes it easier from like an accounting perspective, that I don't have to collect payments on the first and like, just deal with all that. Like it closes, it pays off, we pay our investors, and the end. It's worked out great.
No, that makes a lot of sense. And especially when you're paying a higher interest rate, having to service that loan every month can be difficult for a lot of people. On the LTV side, what is the LTV you guys look for?
Typically 75 to 80% is what we do. That changes. Like, that's pretty standard. Like we can do like sometimes 90% loan to cost. We'll get a little creative just depending on, if it's a borrower who's been with us for 2 years, they've done 50 projects, like, sure, we'll definitely be more flexible with you. If you're a new time person that we've never worked with, or you're not as experienced, like, we're going to require some cash, a larger down payment. But that's the great thing about hard money. Like you're not underwriting to like a bank's guidelines or standards. Like you can go with your gut if you feel like. You can be creative. You can cross collateralize other properties. Like I've had multiple people have come to us and said like, hey, I don't have the money for this, but I have 2 other fully paid off properties. Cool. Let's put some liens on that. And then, we're good to go. So like most lenders, I don't think would even look at stuff like that, but we're all about that and being creative.
Yeah. How many points do you guys charge?
We're 3 points and 14%.
Okay. What is the cost? I've always been curious about the upfront cost for the lender when you do the loan. You have to have a lawyer draw up the docs. They have to, you just mentioned put a lien on somebody's collateral. That costs money. So what are the upfront costs that you usually run into?
Yeah, so usually there is a doc prep fee, like you said, with an attorney, just to review all the docs, make sure everything's good. We have our set of docs like pretty standardized at this point, so that like most of the time I don't have an attorney review them, because it's like if it's a single family house to an entity LLC borrower, like it's pretty cut and dry, and like we don't need to have those redrafted up. But we definitely have to have like a title commitment from a title company. Usually the borrower will pay for that for like our lender's policy. And it depends on that price changes depending on like the loan amount and things like that. But it's typically like 0.75% to 1% of the loan amount is like roughly that. We do have a small wire fee of like $40. But other than that, like there's really not that much to it. We have our origination fee up front that we charge to just, cover our cost and our time and all that stuff. But other than that, it's pretty minimal. And I kind of pride myself on not having a bunch of junk fees. Like most lenders that I talk to, they're like, okay, well, you've got a $600 doc fee. I'm like, oh my gosh. Okay. And then you have a $1,800 commitment fee. And I'm like, okay, well, what is this? And then you have a $400 underwriting fee and then a $400 process. And I'm just like, guys, come on, this is ridiculous, So like, I
get annoyed when people break it out that much. If you had just charged me, there's origination fee, there's a $10,000 origination fee versus there's 20,000 or there's like $5,000 of all these different fees that were outlined. I would be more annoyed by that 5,000 than I would by the single 10,000. It's
all the junk fees. It drives me crazy. And I think that's where the kind of scamminess and sliminess like comes into the market, which I really hate. Like I don't want to be like a fee machine. That's not, like I said, I want to be like, I want to provide a quality service to quality borrowers, and it's a win-win all around.
Yeah. No, I love it. Cool, man. Before we jump into the quick question round, I always like to ask what's on the horizon for you. So next 2 to 3 years, what are you guys trying to accomplish?
Yeah, we're full bore on the lending. So we've got a fund. We're actively out here searching for investors. So we're pretty small at the moment, but I would like to I'd like to have a $10 to $20 million fund within the next 2-3 years. And then on top of that, I'm also working pretty heavily on developing like a loan origination and loan servicing software.
Cool.
So if you are a lender and you're using like Excel and Google Sheets right now, like there's a better way to do it. So, happy to share that with people, but
there's never a better way than Excel. Excel is the answer for everything. That's awesome though.
So yeah.
Right on then. It's time to jump into the quick question round. Are you ready?
Let's do it.
All right. It starts with education. I need 2 recommendations. It can be any form. It could be a book you saw or read, a movie you saw, podcast you listened to, whatever. But I need 2 recommendations, one for general life wisdom and then one for real estate.
So general life wisdom, Buy Back Your Time by Dan Martell. That's that was very like transformational for me, just talking about like what I should or should not be doing and whether or not like I should outsource. And the point of the book is like, take your annual salary, divide it by find your hourly rate and then divide that by 4. And essentially, if there is anything that is less than a quarter of your annual rate or your hourly rate, you should not be doing it. Like it absolutely should be outsourced to somebody else. So
interesting. Less than a quarter of your hourly rate.
So for example, if I make $50 an hour, if there is anything that I can outsource for $12.50, absolutely outsource it.
Okay. That makes sense.
So whether that's like pulling weeds or cutting grass or whatever it may be, like anything that is a quarter of your hourly rate, like outsource it. It is not worth your time, your thoughts, all that kind of stuff.
Yeah.
Real estate specific book. I don't know that I've got anything particular for that. Like I'm sure all the answers are like Robert Kiyosaki or, Bigger Pockets, all that kind of stuff. I kind of shy away from like the mainstream guys. Like I'm a little bit more like off the beaten path. So, I don't know that I have a good one for that. That's
fine.
Yeah.
The Buy Back Your Time, that does sound like a good book. I've never heard it just said, a quarter of your hourly rate, but that's a good measuring stick to use for replacing a task. I'm always a big fan of hiring BAs to do things that take a little bit of your time, because time is the ultimate resource. So good recommendation. That leads us to the next question. This is for your younger self. So let's go back to the Bryce who was just buying or just having his roommates come into that house that you sold so way back when. Go to him, look him in the eye, give him one piece of advice moving forward.
I would say do not let money stop you from buying property or doing whatever it may be. Like that, I have come to realize now that if you truly have a good deal, the money will follow. You can find the money anywhere, but get a good deal on the hook and then go out and shop it, because the funds will come. But I too quickly gave up because I'm like, well, I can't buy this house because I don't have the money. And that is just not the case. There is so much money out there. Like you may have a friend who has an uncle who's got money just sitting in an account that doesn't know what to do with it. Like put in your work, put in the due diligence, like go out there and hustle, and you will find somebody to fund it.
Yeah. Yeah. And if it's a win-win, it will definitely come, especially, as you get older. I'm 38 right now, and, all of my friends have grown up with me, and they're starting to have money that they can invest in other things. So if you're in the position where you are spending all of your time looking for good investments, then you are doing a win-win by bringing your friends into those deals. Cool. That leads us to the next question. This is about the U.S. It is a big place. There is a ton of opportunity out there. Give me the single metro that's not your backyard that you're most excited about investing in today.
Oklahoma. Really digging Oklahoma.
Okay. Tulsa?
Yeah. Specifically like Oklahoma City, but yeah, Tulsa, I'm sure is out there, but pretty much anything Midwest, like Indianapolis, like all those areas, like you can find some really good deals and stuff that still meets like the 1% rule, which is almost unheard of in this day and age.
Yeah.
For example, and the other thing too that I found is whenever we buy a project in Oklahoma, a lot of these houses have like foundation issues, and like that kind of scares a lot of people away. Foundation issues where I'm at, they're not like a dime a dozen. Like nobody has foundation issues here. And so when you do have a foundation issue,
yeah, you guys are on like rock out there, aren't you?
Right. Like it's like someone's going to charge you like $20,000-$30,000 to come and fix this foundation. I kid you not, in Oklahoma, someone's like, it's $500, $1,500.
Jeez.
Because it's like, it's a dime a dozen,
Yeah.
So like, I would not be afraid of like purchasing a house that has some foundation issues.
Why is that? Is Oklahoma just on more porous ground or something like that? Or what's the deal?
I couldn't tell you, I don't know like what it is. I don't know if it's just the heat or how dry or what. I don't know what it is, but it's like every house I look at like has some cracks or some settling or something. It's like, yeah, guy will come out and do it for $2,500 and you're good to go. Like,
That's
okay,
funny.
cool.
That's
Yeah.
definitely the case out here in the Seattle area too. If there's a foundation issue, it's like double the
Yep.
cost of the house. It's like, why is it so
Totally
expensive?
not worth
What's
it.
the deal?
Just demo it. Yeah.
All right. Next question is about finding deals. It all starts with getting in contact with the seller and penning up the purchase agreement. In your situation, we're going to say it all starts with getting in contact with the flipper. So, what is your favorite way to connect with new flippers?
Yeah, RIA for sure. Like absolutely like go to your RIA, but every pretty much any area, like I don't care what size town you live in, like everybody's got a real estate investors association. If you're in like a super small area and there's not one, like start it yourself. Like there needs to be a RIA. There probably is a RIA. Even if you don't physically want to go out in person, which I highly recommend that you do, like I can't think of a single RIA that does not have a Facebook group. Like go in there, post, say, I'm a wholesaler, I'm a flipper, I'm an insurance agent, I'm a whatever. Like if you need help, I'm here. Like we found a lot of really good borrowers for the lending company just by posting in RIAs. And like I've said, hey, I'm Bryce. I'm not a national scammy lender. Like I live in Idaho. I invest in Idaho. I know Idaho. If you need hard money, hit me up. That's been a gold mine for leads and everything else.
Cool. All right. Next question is about lessons learned. Not every deal we get into goes the way we expect it. In fact, most of the time something goes wrong and we need to pivot and solve the problem and then learn the lesson. So what was the deal that went a little bit sideways for you? And then what was the lesson you pulled from it?
We had a flip where a painter stole $10,000 from us. And that was
$10,000 of paint?
Just $10,000.
You had paid
flat,
him,
like,
right?
Yes,
Yeah,
paint and labor. Yeah, and like the sad part was this was a guy that had painted like probably a dozen houses for us previously.
Huh. Yeah.
And like we thought that we knew him. We thought that he was like on a great working relationship, good rapport. I kind of got tired of like, okay, like here's another draw. Here's $2,500. Like I trust you. You've done it before in the past. Like here's 10 grand. Go buy the paint. Here's all your labor. Get it done. And he took off and spent it on drugs or who knows what. And that was so then we had to have somebody come in and not only finish painting, but fix the stuff that he did incorrectly. And it was a really expensive lesson to learn.
Yeah.
So
yeah, and that's the crazy thing. You oftentimes you'll think you understand a person's character, but you never know what's going on in the person's life. If something happens in their life and they act out of character, you can definitely get caught with your pants down. And that is 10 times true with contractors. Contractors are very hard to find, good ones at least.
Yeah.
So if you find a good one, definitely hold on to them and treat them right.
Yep, absolutely.
All right, that leads us to the second to last question. This is about raising capital. This is a good one for you. It does take money to make money in real estate. So what's your favorite way to raise capital?
Social media, believe it or not, like has been very successful for us. I previously in the past was I wouldn't say I was like anti-social media, but I was like very much a consumer instead of a creator. And just putting yourself out there. You don't have to like be crazy. You don't have to like do stupid like TikTok dances and make a fool of yourself, but like just
somebody should start a TikTok dance real estate channel.
Real estate. I'd watch that. I'd watch that. But really what I found is like, just document what you're doing. Like just put yourself out there and it is amazing. Like I have had so many people who have come to me and says like, hey, I've got 150,000 in a high yield savings account. Like, I don't really know what to do with it. Like, can we maybe partner on something? Like, well, sure. That's what we do all day long, So, but if I hadn't posted my before and after pictures of the flip, or if I hadn't talked about our real estate funds, like nobody would even know. And these are people that like I went to high school with, or that like are like acquaintances of acquaintances that are just like, oh, I wonder what Bryce is doing. Like, just document what you're doing. Like you're doing it anyway. Might as well just post it. And like, it doesn't have to be that curated or anything like that. So that's been huge for raising capital.
Nice. I love it. All right. That leads us to the very last question. This is for the listeners. You have given us a lot to think about. I'm sure people want to reach out, get in contact with you. This is a two-parter. Where can they find you? And then what can they expect when they reach out?
Absolutely. So Instagram is probably where I'm most active. Just my first and last name is my username, at Bryce Matheson. I've also got a LinkedIn if you're, more privy to that. We are very much in the capital raising mode right now. So if somebody follows me, more than likely you're going to get a text from or a message from my VA saying, hey, I'm Bryce, looking for capital. If you want to invest in some of our deals with us, we'd be happy to. So that's primarily what we're focused on. But also, like, I love real estate in general. So if you need help, like analyzing a deal or previewing numbers, or making sure that you just want a quick spot check to make sure it makes sense, reach out. I'd be happy to network and help in any way that I can.
Cool. I will put that link in the show notes. So if you guys want to reach out, just click the little more in the description. It'll pull down the full description. In there, you can find Bryce's links. All right, man. That wraps it up. Thank you very much for hopping on the show.
Thanks for having me. I appreciate it.
Absolutely. For everybody who's with us today, thank you guys for showing up. By the way, my daughter woke up at 4 a.m. last night, and so my brain is fried right now. So I appreciate you guys bearing with me as we do these podcasts. But I look forward to seeing you guys on the next episode. If you guys want to help us with the podcast, really all we need is just a review or anything like that. So look forward to seeing you on the next episode, and we'll talk to you later.
All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at gabe@therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.